Robinhood just crossed a major milestone. The company will officially join the S&P 500 on September 22nd, 2025. That matters because the S&P 500 is the benchmark for US large cap companies. When a stock is added, index funds and ETFs tracking the S&P are required to buy it. That forced demand often lifts share prices, and we saw that play out immediately. Robinhood stock was up more than 15% today, trading near at all-time highs. But here's where it gets even more interesting for investors in HOOW, the Roundhill Robinhood Weekly Pay ETF. While Robinhood itself gained about 15%, HOOW was up closer to 18%. That extra push comes from the 1.2x leverage the fund applies to its strategy. A month ago, I did a video breaking down HOOW's pros and cons, and I mentioned I was taking a small position to test it out. I'm glad I did because now I've been able to see firsthand how it reacts to different market moves. And honestly, I really like what I'm seeing so far. If you're bullish on Robinhood and comfortable with modest leverage, HOOW offers a way to amplify those gains while collecting weekly distributions. In my view, it's a compelling way to play the upside, as long as you understand the risks that come with leverage. Here's why Robinhood's inclusion in the S&P 500 matters for HOOW. In the short term, the mechanical buying from index funds will likely keep Robinhood's price elevated heading into the inclusion date. For HOOW, that leverage means those gains could be amplified. On top of that, Roundhill's weekly pay ETFs tie their distributions directly to performance of the underlying stock. So if Robinhood continues to climb, HOOW investors not only see the price appreciation, but also benefit from larger weekly payouts. That combination of income and growth is exactly what makes these products attractive. But there's another side to consider. Once the inclusion happens and the forced buying subsides, Robinhood could experience a pullback, and with leverage, HOOW would feel that decline even more. The difference here is that HOOW doesn't cap its upside, so if Robinhood keeps executing the way it has been recently, any short-term dip could set the stage for larger moves higher, and HOOW will fully participate in that upside. HOOW has been one of the strongest performers in Roundhill's weekly pay lineup this year, largely because of Robinhood's impressive stock performance. In fact, when we compared it to both the YieldMax HOOD Option Income Strategy ETF and Robinhood stock itself, HOOW came out on top, outperforming them both. Robinhood did take a hit to the downside in recent weeks before this latest 15% surge on the S&P 500 inclusion news. So I went back and reran the numbers, comparing the total performance of all three once again, to see how things stack up after this most recent move. Let's take a look at how Robinhood and the two income ETFs tied to it performed over this short summer stretch. We'll start with Robinhood stock itself. The stock made a huge move, climbing from just under $80 to over $117. That's close to a 50% gain in less than 3 months. No dividends, no income, just pure price appreciation. Next is the YieldMax Option Income ETF, HOOY. The share price here barely moved, inching up from about $65 to $68. But this fund isn't built for price growth, it's built for income. And in that category, it delivered, paying out roughly $17 in distributions. That income accounted for almost the entire return, bringing investors to about a 32% total return in the same window. And then we have HOOW, Roundhill's weekly pay ETF. This one came out as the clear standout. It participated in Robinhood's rally, moving from around $52 to nearly $69. On top of that, it added about $13 in distributions. Combine the two, and you're looking at more than 55% total return in under 3 months, the strongest outcome of the group. If we look back at the numbers Roundhill posted for the period ending August 4th, Robinhood stock made a big move, climbing to roughly a 50% total return. HOOY ticked up a little bit, moving from 29% to about 32%, and HOOW pushed even higher, now sitting at around 55%. Both Robinhood stock and HOOW accelerated after that earlier update, but HOOW maintained its leadership position. It not only kept up with the stock's move, it actually extended its edge, delivering the best overall return of the group. HOOY improved slightly, but it continues to trail behind both. Roundhill's HOOW ETF has been the consistent standout, capturing the upside and adding weekly income on top. Roundhill's weekly pay ETFs work best with stocks you're already bullish on. And in Robinhood's 2025 summit on September 10th, they announced different products that could drive the stock price higher from here. They announced upgrades to Robinhood Legend, their pro trading platform. This is where they're really going after the serious trader. Futures trading is expanding to more than 40 CME products, everything from the S&P 500 to oil, Bitcoin, and gold, with low commissions and no PDT rules. They're rolling out trading ladders with one-click execution and full level 2 and profit and loss data, not just for futures, but for stocks, exchange-traded funds, and crypto. And they're adding AI through Robinhood Cortex, which lets you build custom technical indicators and run real-time market scans, all without touching a line of code. Plus, device linking means your desktop and mobile stay fully in sync, so you can control trades seamlessly across platforms. Short selling is now available, giving investors the ability to trade bearish moves or hedge long positions. They're adding overnight index options, so you can trade select index options. You'll also be able to open multiple brokerage accounts inside Robinhood and manage different strategies under one roof. And those trading ladders I mentioned, they're expanding to mobile for stocks, exchange-traded funds, and crypto. And lastly, Robinhood Social, their new community platform. Think of it as a verified trading feed where real users post their live trades, complete with profit and loss. You can follow other traders, replicate their moves, and see everything from stocks and options to futures, crypto, and even prediction markets. They're even including public trades from insiders, hedge funds, and politicians. The platform launches invite-only in early 2026, and it's going to be free. Robinhood isn't just a beginner's brokerage anymore. They're positioning themselves as a full-scale financial super app for active traders. They're blending social trading, basically a verified FinTwit inside Robinhood, with AI-powered tools, advanced products like futures and overnight options, and a seamless cross-device experience. Robinhood wants to rival Interactive Brokers and TD Ameritrade, not just capture first-time investors. So the question now is whether traders embrace this vision, and if Robinhood can execute at a level that keeps up with the pros. As someone invested in both Robinhood stock and Roundhill's HOOW, I'm really looking forward to seeing how all of this unfolds. If you found value in this breakdown, make sure to hit like, subscribe, and turn on the bell so you don't miss future updates. And let me know in the comments, are you holding Robinhood stock, HOOW, or both? Thanks for watching, and I'll see you in the next one.